Today's conversation is sponsored by First Generation Capital Partners.
We're the real deal. We've been investing for the last 10 years together. We've grown this portfolio. And I think marketing in any business, it's sales and marketing. Those are the two hardest things in any entity. We can teach you how to do it. We're just trying to find the students to come aboard.
You're listening to the Going Long podcast with Billy Keels, the #1 podcast for long-distance real asset investing.
Welcome to the Going Long podcast. We're back once again to continue to help to educate you so you feel much more comfortable as well as confident investing beyond your backyard. And yes, I'm your host, Billy Keels, and I am super excited to welcome you back to another fantastic episode of the Going Long podcast. And listen, before we even get started, I just want to say to everyone, thank you so much for continuing to tag us across LinkedIn, across Instagram. It means the world to us, so we can continue to grow the Going Long family. And also to, for those of you who have left your honest written review as well as rating, thank you. If you've been thinking about doing it, go ahead. There's even a nice little video, especially on the Apple Podcast platform and Spotify. Just click the link here in the video to leave your honest written review as well as rating. Also, if you want to find any of the previous episodes of the podcast, go to firstgencp.com/podcast. You can find every single episode, over 350 at this point in time. You can find the audio, the video, the transcript, whatever you need. So just go there, firstgencp.com/podcast. And today, if you've been looking for the framework to help you figure out, it's a simple 3-step framework, how to be able to create your runway to buying more time. This is a conversation with someone who's helped thousands of students and billions of dollars of assets under management, really helped lay out a clear path. You're going to enjoy the conversation that we're having with the founder of Jake and Gino, Mr. Gino Barbaro, and we're going to get to that conversation just after this. So if you want to know the 3-step framework for investing in real estate, no matter where the property is located, then guess what? Today's a conversation you're going to want to listen to until the very last word. You know why? Because today's guest, listen to this. Not only started his own family company business, he also realized the importance of real assets. I'm not going to talk too much because I'm sure he's going to tell us the whole story, and I don't want to take anything away. But also, he's published not one, but 2 books, both Wheelbarrow Profits and The Honeybee. It gives me great pleasure to welcome to today's conversation the founder of Jake and Gino LLC, Gino Barbaro. Gino, Gino, welcome to the show, man. Look at this. I'm already super starstruck. It's amazing. Gino, really, really excited to have you here, man. Welcome.
Thank you, Billy. It's a pleasure for being here. And listen, thanks for allowing me to share the story of Jake and Gino, of my family. And I'm sure we're going to get into how Jake and I met and all that stuff.
Yeah, we definitely are going to do that. And I've got 5 questions I'm going to ask you, at least 5 questions. You're going to get 2 in the beginning. You're going to get 3 in the end. And then in the middle, well, we're going to get to know a whole heck of a lot more about you. And so I'd like to help you or ask you to help us get to know you a little bit. Where is it that you call home today?
I live in St. Augustine, Florida. I am an economic deserter of New York. I left New York in 2017, and it took me a few years to actually get the courage, because once a New Yorker, you're not leaving. And unfortunately, things have changed over the last few years, and I didn't know COVID was coming. I didn't know COVID was going to be a thing. I just hated cold winters. I hated taxes. I hated high cost of living. And the people could be a little grumpy up there. When you're living in New York, you're paying all that money and it's freaking cold all the time. You're like, I'm going to get out of here. So I chose Florida in 2017. I left and it's been amazing. St. Augustine is in the north part of Florida. So we have it would be considered South Georgia. So we've got seasons, the oldest city in the United States, historical. So it reminds me a lot of Europe and Spain specifically. And it's just an amazing place to live and to grow a family.
All right. Fantastic. Well, I appreciate you sharing that with us. And then going to lead us right into question number 2. I love positivity, man. And I know you do as well. So help us understand, what is the most positive thing that's happened to or for you in the last 24 hours, Gino?
Ooh. Well, last night played cash flow with my 12-year-old. And it was awesome because it was just me and her. And what's amazing is she's so supremely talented. I've got 6 children. My oldest one is 23 years old. She's a Catholic missionary. My youngest one is 8. She's probably going to be the next entrepreneur rock star. She loves to buy crap. It's just amazing. But the 12-year-old to me is special because she's so smart. And I think kids learn by playing games. I sat down with her. taught her all about income statements, balance sheets, taught her all about assets, doodads, and she's out there buying stocks and buying real estate in the game. And it's just an amazing way that kids learn by playing games. And I think adults, we forget that. We've got to get back to playing games and learning. Don't worry about going to school. Figure out something that you really love to do and start playing a game. And that's one of the best ways that you can learn. So for me, sitting down and playing last night was awesome, was special.
Man, absolutely love that you share that, and the fact that you with your 12-year-old were talking about, and I'm sure you talk about frequently, like income statement, balance sheet, and things like that. So, and thanks for sharing the story, Gino. I have to tell you something, man. I didn't tell you this before. This is a little bit of kind of the Going Long family knows this about me. I'm a recovering perfectionist. And what that means is I try to do things sometimes that are a little bit almost like impossible, like tell your entire backstory in 1.5 seconds. Like I was already flustered in the very beginning. It's like, it was impossible that I was going to do that. But this is this recovering perfectionist gene that I have. So I'm going to ask you for some help. And I would love for you to tell your backstory in your own words. And you can take a lot more than 1.5 seconds if you like. And also too, if you can share with some of us, some of the major decisions that you made to get to this point in your journey, and then we'll see where you and I take the conversation from there.
Well, I wish I was a recovering perfectionist. I'm still a perfectionist, and it's challenging because I've got 6 kids. Like I said, from 23 down to 8, we homeschool our kids, and we were homeschooling before it was cool. I was doing things way before it was cool, and now it's cool to homeschool. It's cool to start a business. It's cool to be an entrepreneur. I opened up my restaurant back in 1994 with the family. And I had the restaurant for over 20 years. And during that journey, I lost my father back in 2007, 2008, the Great Recession comes, and I just hate what I'm doing. I'm living my dad's dream. It feels like it. I met Jake in 2009. He was a pharmaceutical rep. I was the pizza guy. And we decided in 2011, when he moved to Knoxville, Tennessee, to start buying assets. And it took us 18 months to find the first deal. Now, throughout that whole entire journey, the perfectionist made a lot of mistakes, and that was painful. And bought a mobile home park, crapped out. Bought a strep center in New York, crapped out. And I finally decided multifamily is the vehicle because I had bought a couple smaller multifamily properties, invested a ton of my education. Thankfully, I did that because when I met Jake, he knew nothing. He had the market. He had the what shall we say, the make it happen attitude. He was such a hard worker. We just gelled right away. And in 2011, when we got together, 18 months, our first deal, we bought in 2013. And since then, we've been able to acquire over 1,500 units, only 3 syndications. So the vast majority of the portfolio has been just bought internally with me, Jake, and another partner. We've done over $20 million in refinances. So we've been able to refi and roll the money into the next deal. We've used seller financing. And, I love your podcast name, Going Long, because it really is about that long-term mindset. And what we've done in the last decade, the first 40 years of my life, it was nothing compared to what the last 10 years are. And all it was the shift of that responsibility, of that long-term mindset. We have 2 sayings: buy right and sit tight. And if it don't cash flow, you let the grass grow. And it may be challenging over the last couple of years to buy a deal like that, but that's what it takes to be, I think, successful in this business. And we're going to talk about the 3-step framework. But for me, real estate is an amazing business. It's scalable. And if you look at it from that perspective, from that lens, what it's allowed me to do, to be able to have one restaurant for over 20 years, where I was the mom and pop, to be able to have 1,500 units with Jake in 5 years, it's just been an amazing transformation for me. And all it was a couple of mind shifts, a couple of paradigm shifts where I found a great partner. I was able to continue to reinvest in the business, and I was continuing to able to think long-term, not sell that deal, hold on to that deal, refinance the money, put it into the next deal, and continue to look long-term.
And so when you continue to look long-term, and you talked about a couple of different things and some of the key dates that you talked about, 2011, 2013, 2007. And also it makes me, well, I guess the big question that comes to my mind is, as you get to this long-term mindset thing, you found Jake found you. I'm just curious, how did that actually happen?
I'll give you another date. In 2008, I read the book, The Secrets of the Millionaire Mind by T. Harv Eker. Mm-hmm. And Billy, I was pissed because I'm working my ass off. I've got 4 kids at the time. I'm working harder and I'm making less. And I'm blaming everybody. I'm blaming Obama. He just got in. I was blaming Bush. I was blaming the economy. And in that book, your fruits are in your roots. And my roots sucked. Mm-hmm. Up at that time, I wasn't creating value. I started the restaurant business because I started the business to provide for my family. Right. I didn't start the business to provide for my customers. Right. And that was the mind shift for me. And all of a sudden I'm reading T. Harv's book and I'm like, I want to punch the guy in the face. I read it again. I'm like, this guy's right. It's not the economy. It's not anything else. It's those little gremlins in my mind. It's those limiting beliefs. It's that I'm not providing enough value out to the economy, out to out to the world. And then when I started looking at it from that perspective, I met Jake. I was able to provide a tremendous amount of value to Jake. I actually knew how to underwrite a deal. I knew how to talk to brokers. I knew how to analyze a market. I knew how to do due diligence because I made those mistakes, but I learned them. And then all of a sudden, couple that with saying, I'm going to buy this deal and I don't need to exit in 2 years, because you make money in real estate when you exit, not when you buy, when you exit, when you either refi or you sell. You're still making cash flow, but the big money is when you exit that deal. So for me, thinking about that first deal, and we still own that very first deal from 2013. We refied it out, and every month that deal is paying us off. Rents went from $350 a month to today $1,100. That's what's talking about going long. And I think a lot of us, we quit because we say to ourselves, oh, we've got a few bucks, let me sell out. And that's the beauty of real estate. If you can stay in long enough and you can create that business model, there's two mistakes that people tell me that I've interviewed hundreds of people. They wish they had bought more and they wish they hadn't sold. So when somebody's been in the business for 30 years and they give me that advice, I try to take that advice. Now, not every asset when you're younger and you're trying to create equity and trying to create wealth, can you hold on to those assets? You may have to repurpose your portfolio and, level up, buy a 10 unit, maybe sell it, go to a 30 unit. I'm not talking about that. I'm talking about when you're stabilized and you're stable there and you're buying these assets and you're like, wow, I've got a great golden goose here. Why would I kill that golden goose that's laying me eggs? It's so hard to find another golden goose. I think you just have to be able to identify what that golden goose looks like to you and say to yourself, I'm going to delay the gratification. I'm going to buy this thing because the cash flow and the tax benefits over the next 10 to 15, 20 years is what's going to propel my wealth and what's going to be able to help me to generate that legacy wealth and that generational wealth for me.
Yeah. And these are some of the key aspects that are really, really important. And as you were saying that, I just realized, I want to remind everybody that you can also hear a lot of what Gino's talking about. I forgot to mention that he also has his own podcast, the Jake and Gino Show. I forgot about adding that, and I'm sure we'll include that in show notes as well. You got a number of different podcasts, but that one I know that I wanted to highlight. So thanks for giving us some insight into the connection with Jake and also some of the different things that have happened in another key date, as you mentioned before, in 2008 with TR Records book. So a couple things, and I know I led with this in the beginning, and you've kind of alluded to this already. But can you talk to? By the way, I just love when you were talking about that you make your money on the exit, because everybody talks about just the opposite, and you're so spot on. You make the money when you exit. But the 3-step framework, because I know that this is something that you are helping to educate so many people, hundreds, thousands today. So can you talk to us about that 3-step framework? And also keep in mind, there are a lot of people that are just like me that are, maybe I take it to the extreme. I live in Europe, buy assets in the US, but maybe somebody today is living in, I don't know, California, and they're buying something that's in Florida or Texas or wherever. Talk to us about the 3-step framework, please.
You talk about the student base. Our students have closed over 70,000 units. That's over $4 billion in assets, probably over 5 now. And wow. For us, when we started, we didn't have the 3-step framework. We had 2 guys that were really hungry, the pizza guy and the drug rep that made some mistakes. But we noticed a trend or a thread. And one day, Jake's sitting out on the lawn doing landscaping, and big chainsaw guy. And you see the wheelbarrow there, and it's tilted over. And on the wheelbarrow, there's 2 legs. We call that the buy leg and the finance leg. And on the wheelbarrow, there's the wheel. The wheel is the manager, right? Where most educators or gurus out there don't even go close to, because that's not sexy. But that's the systems, that's the processes, that's the asset management of the 3-step framework. When you're looking at a deal, you need to look at the deal through that lens. And now, if you're in single family, or you're in self-storage, or you're syndicating deals, or you're a limited investor, whatever it looks like, it's still the same framework. And to us, buying the asset, managing it right, and financing it is the 3-step framework. When you're buying a deal, if you're a limited partner or you're investing as a syndicator, you need to know what your buy rate criteria is. It doesn't matter if you're living in Europe or you're living in California. What kind of asset are you buying? What's the buy rate criteria? What's the market, first of all? Next, let's get really granular. What's the median income of what you're looking for? Is it in a flood zone? What's the vintage, the age? What's the unit mix? You want 1 bedrooms, 2 bedrooms, garden style, townhomes? What type of amenities do you like? What's the population growth, the job growth? Focus on what the buy rate criteria looks like. Because Billy, one of the biggest things that students make when they come on board, I want a deal. I need a deal. Well, first of all, a deal for Billy and Gino who've been doing this for years, and a deal for somebody starting out brand new, it looks a lot different. That deal back in 2013, smoking deal for Jake and Gino when they started out with. Now, not so smoking. Not saying I wouldn't buy it, but at the price point that it is now, I would not. So understanding the buy right criteria and creating your own buy right criteria will allow you to look at syndicators, look at people who are actually sponsoring deals or looking at deals for yourself, and speaking to brokers and investors, you'll be able to say to them, this is what I'm looking for. Focus will give you clarity. Now, finance right, you have all the gurus out there talking about bridge financing and getting into the short-term debt. We've always preached long-term fixed rate financing. We like assets that you put fixed rate debt on there. We've used loan to cost over the last 3 to 4 years because we want assets that all of a sudden you're doing this bridge debt at 3%. Now where's bridge debt? 9%. So the financing aspect is really important. You can get into the creative side of it as well. And then manage right is what I think most people really, they flounder, because if you're not doing the asset management, someone else is doing it. And I think you have to understand, Jake and Gino, we say we create multifamily entrepreneurs. If you look at this real estate investing, whether you're in the single family space or you're in multifamily or whatever niche you're in, look at it as a business, as a scalable business. And if you're able to separate the property management from the asset management, they're two different and distinct, I think, functions. Jake and I, that was our biggest mistake early on. We were managing our own portfolio, so we weren't really asset managing. We were more property managing. Well, where's the budgets? Where are the owner draws? Don't worry about just the customer experience. You need to focus on asset managing that property as well.
Hey, Gino, you know what? I'm gonna just stop you here because this is one of the, and I love that you break it down for us, right? Buy right, finance right, manage right. But then also you're talking about something that I think I want to make sure they understand what you're saying here, especially for that, that busy person who is, they're out today and they're working in enterprise software sales, or they're doing whatever they're doing, or they're a doctor and they're going, well, hang on a second. He just said asset management or property management. Isn't that the same thing? Break that down for us. Gino.
Yeah, I will. The property management, when you hire a property management company, if you're not doing this third party, I think the goal of the property management company is to create some type of customer experience, customer journey. When somebody walks into the office, we call them residents. We don't call them tenants, they're residents. We don't call them units, we call them apartment homes. You're trying to create a customer experience or customer journey that's often neglected in the C space. So the property management company is there doing the earn returns, doing the day-to-day. The asset manager should sit up above. And there's a little bit of a conflict because the asset manager is the cheapo going, hey, we got to get money to the investors. The property manager is like, hey, I got to spend $300 on that ceiling fan. I got to deliver this customer experience. I got to get butts in seats. The asset manager is like, we have to avoid turnover. So make sure we're not saying yes to everybody. So there's sort of a conflict. What needs to happen, in my opinion, what we teach our students is the asset manager should be on weekly calls with the property manager to be discussing certain key performance indicators, KPIs, because if you can't measure it, then you can't manage it. And hey, 15 minutes a week, if you can't schedule a call for 15 minutes a week with a property management company, they're not your company. You got to manage evictions. You have to manage delinquencies, income, cash coming in, the budget. That has to be done at the very least on a monthly basis. I would say a weekly basis. And then the asset management company is just watching the budget, making sure that they don't go over budget. And the property management company is making sure that they're managing the property and doing day-to-day duties on that property. Does that make sense?
Absolutely does. I really appreciate you taking just a couple seconds because those are terminologies that get thrown around sometimes and we don't give further explanation. And well, if you've helped your students acquire 70,000 units and over 4 billion, and it's probably a good moment for us to be able to learn. So I appreciate you breaking that down just a little bit more for us. I really wouldn't want to draw on your own personal experience as well as now working with, thousands of students. And I was thinking about it a lot from Gino's or from Jake's perspective, because I was the really busy, corporate guy and did that for 26 years and was working at the big, making the big salaries and the huge bonuses. And sometimes it can be a struggle because you hear about the great things that Gino, that you're talking to us about, or somebody who's listened to the podcast today and they're thinking, yeah, but I just don't have enough time to actually meet Jake and Gino, how are we supposed to meet one another? Because I'm always busy at my job and I'm making a lot of money, but this stuff really sounds interesting to me. Where have you seen that most of your students that have struggled, that are in that corporate role, that they haven't been able to make the connection? What is it they do differently that eventually allows them to bring their duo, their dynamic duo together? Or maybe it's fantastic trio are. I don't know how that would go, but you know what I mean?
Yes, that's an interesting question. And what I would say to you is I'd push back and I would tell everybody it is never about time and it is never about money. Those are the two excuses that we use. Read the book, The Psychology of Money by Morgan Housel. Understand your relationship with money. Understand what's holding you back. For me, I ultimately got sick and tired of the pain. I freaking hated doing what I was doing. I was a soul suck. I actually felt I was being sinful to my children because I was going to work and I hated my job and I come home grumpy and I wasn't holding it up. You know, I just did a couples coaching retreat with a gentleman named Phil McKernan. Nine couples went to Ireland a month ago and we worked on ourselves. And I think anybody listening to this, I've heard the term happy wife, happy life being thrown around. That is the farthest thing from the truth. We need to work on the relationship with ourselves. And it's hard as men to do that because we're tough, we're macho. The good book says, love thy neighbor as thyself. That presupposes that we love ourselves. We need to do work on ourselves, understand what our why is, what our motivations are, because our motivations are not about money. Ultimately, I think my motivation was about autonomy, about getting my time back and about becoming really good at something and about being able to impact other people. The end result is I'm making a shit ton of money now. I don't know how that happened. I look back, I'm making a ton of money now. I really was focusing and wanting to do that. That just got lost in the way. And all of a sudden I got a lot better at what I did. So for everybody, understand the relationship with yourself. Try to work on your own relationship. And it's okay to be angry. It's okay to be judgmental. Just understand that those emotions are normal. Don't hate yourself. Work on yourself. If you need to, go to therapy. Find a life coach. I think for me, that was so instrumental back in 2015. I became certified as a life coach. So when I went to this couples coaching, a lot of the people there couldn't even understand how to answer the questions because they'd never been answered those questions. And all of a sudden you have these emotions well up in you that you've never had before and you don't have the answers and you want to solve the answers. Sometimes it's good just to let those emotions sit and let them sit. And then for me, ultimately, we're always looking to what our why is. Like, what is that ultimate thing that we want to achieve? And I think for me, it was just creating a great family life and hoping to share the family life that I've created with our students and seeing that family and being married and impacting the family. It was truly important for me. So it's a tough question. I think a lot of the students, when they come on board, they come from multifamily, but then they find community, they find relationships, they find the experience, and they're like, wow, multifamily is a great vehicle to be able to do all that. And I can make a ton of money doing that, but I just ultimately want my autonomy. So if you've got some pain in your life, either Tony Robbins says it best, Billy, you're either living an amazing life and you want more of it, or you're living a sucky life and you come join Jake and Gino. If you're in the middle where you're like, it's okay, you're not going to take action. And I was there for years until I felt that pain. You're either moving away from pain or moving towards pleasure. In the beginning, I moved away towards that pain to get better. I moved towards Jake and I moved towards multifamily. Now I'm moving more towards pleasure every day where I'm on these podcasts. I'm able to share my stories. I'm able to inspire the Jake and Gino community. And I think that's what we all need to do. Is there work involved? Absolutely. Is it hard to work on yourself? It's harder not to work on yourself because 5 years from now, if you don't like the person that you were 5 years ago, if you haven't grown and you like that person from 5 years ago, not that you didn't like him, but if you haven't expanded and experienced more than the next 5 years, then you're not living up to your full potential. So take the time, work on yourself. And I think the relationship with yourself is so important in understanding what you need to do next in life.
It's such a key component, Gino, because it is one of the things that we hear it a lot, but there's so little action that's actually taken collectively speaking, right? I mean, there are individuals who are saying, okay, well, I want to continue to develop. I want to continue to grow. I'm going to continue to challenge myself. But I don't think that there's enough people that actually talk about how can you go about doing that? Like, what are some of the steps that you can take that you can really start to become more, not just to reflect, but also to reflect and take action? Because I think that's where you were going with this, especially is the taking action part.
I can give you a couple of things that I think anybody can do right now listening. And Phil said it was really important what he was discussing. And most of us don't do this. Our past, we need to look at the relationship we had with our parents and not look and say, hey, I had a great childhood. I'm not saying you didn't have a great childhood, but we all carry some form of trauma, some a lot more than others. But hey, I wish my dad had hugged me a little bit more. I wish my dad had said, hey, Gino, you're freaking awesome. He didn't say that as much. Did it hurt me? Yes. But I can deal with it now, and it can affect the relationship that I have with my kids. So I've overcompensated that I show a tremendous amount of love and every day I'm hugging and kissing them. So just look at the relationship that you had in the past with your parents. And be honest. My mom, sometimes she drives me nuts. She's always asking about my brother. How's my brother doing? I'm like, Mom, how about me? I know I got my shit together. I got 6 kids. I'm doing great. But every now and again, and I'm not saying she doesn't, but I perceive it that way. So perception is powerful. How we perceive things, how we feel is so important. And it may be painful. And there may be a lot of, I'm crying in the middle of the field back in May with Phil. I'm sitting at the bar looking at a cow and he's telling me, hey, Gino, how you doing? I'm like, I'm great. No, how you really doing? And I felt anger because I had to leave New York because I needed to set boundaries with my family. When I left the restaurant and I quit, they were still leaning on me. They still wanted me to do things. And I felt as if I have to leave. And I felt like I was abandoning my family and my mother who raised me, an Italian mom. You know how Italian moms are. They never leave you alone. So I felt that I had abandoned them, but I felt that anger, and I felt the anger with my brother because I'd been in business with him for 20 plus years. And all those emotions coming to the surface, it's really important. So look at your past, diagnose your past, and talk to somebody about it. But then ultimately, don't just stay there. And I think that's what Phil helped me out with, a month ago, seeing where I had holes, seeing where I had the anger, and then all of a sudden going towards the future.
Absolutely love the fact where you talk about looking at the past and then going towards the future, right? But really taking a moment and dedicating the time to yourself to be able to reflect. And I appreciate you taking very specific, look at the past relationships that you have, or the upward relationships that you have. And I think that's is a really concrete, actionable step that everyone can do. And in order to get the most out of it, is probably best to have somebody that can be that mirror in front of you that can really help you recognize the things that you are looking at or diagnosing or analyzing as part of that reflection. So I do have one other question before we kind of get to the going along final 3, Gino. There's so much goodness, man. This is because there's so many things that go beyond just real estate, and it goes into mindset as you're talking about. But one of the things that we've kind of touched on a couple of times is you stop just focusing on you and looking inward, but it's really about how you can add more value to others. You talked about the community that you and Jake have, that you founded, that you started. But talk to us about that, like that initial kind of desire to share, to build community. And you've already talked about some of the different results, and you've talked about the units and the assets under management. But talk to us about some of the other more intrinsic values that you see as a result of the action that you and Jake took many years back.
It took me a while, Billy, to be able to understand that I was living in the scarcity mindset. And as a single entrepreneur, having one restaurant, doing $12 an hour work, and it was all about, hey, I can't hire an extra person. I'm going to make less money. I lived in the scarcity mindset. And once I became financially free, I was like, okay, the pressure's off. I can start thinking about becoming a little bit more abundant. And it's been a journey. And like I had mentioned, that Psychology of Money book, I had some real psychology with money. I was a great saver. And to this day, I can't spend money on myself. I'll spend money on my children. I'll spend money, but to buy myself that gift or splurge on myself, it's challenging because I was always trained to save for a rainy day, to save to buy that next asset. So for me, really exploring, I think, your inner self and that relationship with money is really, really important. But when I created the community, that's what Jake and I were lacking. I just didn't have any guidance, and it got us through COVID. I mean, during COVID, we had events, people, 80, 100 person events. And Jake at one point said, but this is normal. This feels great. And I think community is important because multifamily is a team sport. You can't do it all yourself. Yeah. You can do it yourself in the first 3 or 4 deals. But then after that, are you raising capital? Are you asset managing? Are you property managing? Are you deal hunting? Are you talking to investors? Are you creating investors? Are you doing pitch decks? I mean, the list goes on and on. So for us, the community is great. I don't raise any capital from the community. The community's raised over $300 million amongst themselves. I think it's just a great ecosphere. And for me to be able to create that, it's sort of an ego thing for me. I love getting emails from students saying I closed a deal. We've got over 100 students that have left their jobs. I've impacted at the very least 100 families. And if you think about the families within those, and I think community is the most important thing. Find the community that resonates with you. Where there's so many groups out there. There's so many really good groups out there. Find that resonates with you. But more importantly, you need to invest in that, because my wife just started this health training, and she wanted to get, and she's already fit, but she had never paid anything. And doing a couple of YouTube videos, not a big thing. She's paid 5 figures to get with this health coach. Now, the health coach put a watch on. The health coach is monitoring my wife's every move, Every day she exercises, her heart rate variability, all the metrics. Now my wife knows that somebody's watching. Guess what? She's going to put in the work because she spent the money and somebody's looking over her shoulder. That's why I created the Jake and Gino community, because there's accountability. You're in a group. You're with other peers. You're in a room with other people who are doing what you want to do. There's nothing, no politics, no nothing. All we focus is on business. There's a lot of faith going on. There's a lot of family going on. There's a lot of people in that room that want to be successful in front of their peers and want to talk to other people who are part of a community. I don't just say like-minded, because we do have other likes and other differences, but at the very core, it really is about family, faith, and trying to create legacy wealth and generational wealth for our kids.
You know, being able to do those things and being able to create the generational wealth for the kids, like it's great when someone like yourself decides, hey, listen, you wanted to make a positive impact, and now you're saying that your community is having so much of a large impact on these different in these different aspects of life, and helping to continue to move forward. Just out of curiosity, what was probably one of the bigger challenges that you found as you went to found the group and you began to grow and build more momentum? What would you say is like one thing that comes to mind of a challenge?
The biggest challenge for us is the marketing. It's very difficult to market because you have to have so many people calling you a scammer. I mean, I don't have the thickest skin in the world. I take things personally. I'm an emotional person, and I don't want to say that I'm sensitive, but when people are calling you certain things, you're trying to defend yourself all the time, and you really want to market. And it's hard to market because you're trying to get people in your community that really are focused on whether you're in single family, whether you're doing multifamily, or you're a professional. That's who we're trying to attract. And it sometimes is very difficult to get the message out there because there's so much noise out there, right? And what we're trying to do is we're the real deal. We've been investing for the last 10 years together. We've grown this portfolio. And I think marketing in any business, it's sales and marketing. Those are the two hardest things in any entity. We can teach you how to do it. We're just trying to find the students to come on board.
All right, fantastic. Well, I appreciate you sharing that with us. And you know what, Gino, like I want to keep talking to you forever and ever and ever, man. But the thing is, I just we've kind of got to get to the going on final three, but I never asked any of our guests, but you're our special guest. Are you ready?
I'm ready.
All right, cool. You were born ready, man. There's no question, no doubt. So, and I love the fact that you are a world traveler and all this kind of good stuff. So asking you this question really is going to be fun and exciting. So we started with you over, you left New York, went down to Florida. And so you started there, but I'm originally from Columbus, Ohio, but I've called Europe home for the last over 2 decades between France, Italy, and most recently Spain. And so I would love for you to share with us, what is your favorite European city that you've either visited, which I know you visited a lot, or is still on your bucket list to visit?
I love Rome for some reason. It's a dirty city. It's loud. It's noisy. It's polluted. But when I walk the streets and I say to myself, I walk into the Pantheon and that building is 2,000 years old. The dome is just spectacular. The sewers are still working. I say to myself, they were able to accomplish this 2,000 years ago. And just to sit there, it's just a marvel to be able to go into the different churches. There's so many churches. We went to a church called Saint Cecilia. My daughter's name is Cecilia. To go into the church and to go into the crypt below where Cecilia was martyred, it's just an amazing experience. The food there is wonderful. The Colosseum, we spent the day in the Vatican. There's so much to do. You could spend a month in Rome and not see it all. But I would just say, please, if you get a chance, go to the Vatican. The Vatican museums will blow you away.
Yeah, absolutely fantastic. So we'll take Rome, another vote for Rome. Appreciate that. Question number 2. And I used to have this really long, drawn out question, but I'm just going to get straight to the point with you, Gino. Whenever you're trying new things or you are doing new things, there's a tendency to not get it right the first time. And so you make a mistake or you have a learning opportunity. However you want to call it, whatever the result was you were looking for, you didn't achieve it. And especially when they're relevant, we tend to sit down and we really look and say, okay, well, what did I actually learn from this mistake? And so I don't want you to think about or reflect on the mistake. It's really the opposite side. It's the lesson. And the one lesson that you paid full price for, that today someone is going to have the benefit of learning from what you did to minimize the probability that the exact same thing is going to happen to someone else. So what's the one lesson you want to share with me and the Going Long family today as a result of something that maybe you didn't get right?
Great. I started singing opera 2 years ago and my kids were singing it already. So they were already much better than me. I'm an Italian. I'm a dramatic tenor. I can even sing for you in a second. But what I learned was, it was amazing how difficult singing is. It's one of the hardest skills you could possibly ever learn how to do it. I didn't think so. It's very physical. One thing that I learned was that you need to find somebody who's an excellent teacher. The second thing is pull your ego out of it. I was learning and I was singing in front of my kids, and one of my kids was telling me, Dad, you're doing it wrong. You're not going to hit the note. You're not compressing properly. And I took it personally and I started screaming at them when I should have said to myself, they're probably right. And this goes back to the past, how my mom always judged me and people always judge me. So I'm going back to the past and saying, who is she to tell me that I'm wrong? But when I should have said to myself, she's absolutely 100% right. Let me take that advice and let me try to implement that advice. And that's with anything you're doing in life. Initially, when you're starting something, it's fearful, it's afraid. But I knew why I was singing. I knew because we go to church every Sunday. I wanted to get better at singing. So there was that why. So I didn't quit. But if it wasn't as important to me, I might have said to myself, I'm not doing it anymore. So extract the ego, pull the ego, and try to take that constructive criticism as not just criticism, but a critique, and try to always get better. Proper preparation prevents poor performance. And singing, learning how to buy multifamily, becoming a better father, whatever it is, the better prepared you are, the better you're going to be in life.
Absolutely love that. So, and look for the excellent teachers and be ready to continue to take action. So, this is the last of the Going Long Final 3, Gino. This is really about helping to feed our minds. And I mentioned before, you have at least 2 books, Wheelbarrow Profits and The Honeybee. And so we'll include links here as well as in the show notes. Also, and you've talked about a couple other books, but what is one book that you would recommend to the Going Long family today?
I mean, I've read literally hundreds of books in the last couple of years. One that really sticks out is Stephen Covey's book, The 7 Habits. I mean, I read that book back in 2008. Didn't have that as a profound effect as T. Harv's book. I just wasn't ready for the book. Right. But I read it a couple of years ago, and his habits are just unbelievable. If you read the book and you digest it and you start looking at things as paradigms, as maps, and stop just for yourself going, that's not possible, but looking at it differently and start inhabiting, win-win, sharpening the saw, start with the end in mind. All these habits and all the stories that he put in within that book have been, for me, one of the best, personal development, self-help books that I've read in the last 10 years.
7 Habits of Highly Effective People. Definitely will include that in the show notes as well. And man, Gino, this goes by so super fast. I mean, I think just a couple minutes ago or a couple seconds ago is what it felt like. You were talking to us about you playing cash flow with your 12-year-old daughter and just being able to see the wheels turning and recognizing, between your children and 8 to 23, that you had that special moment. Also reflected on the loss of your father. You talked about also being able to recognize that you were in a family business that, hey, once it was time to move out. It was time to change the mindset. You were already ahead of the curve by homeschooling before homeschooling was a big thing. And then you had the opportunity to connect with Jake. And then you also, as you went out and you've gone over now at this point over 1,500 units, but more importantly, I would say, is that you're also helping others, right? You founded Jake and Gino, and you are now seeing that. You talked about $70,000 that your students are doing today, and over $4 billion in assets under management, and building relationships and having faith at the basis, and being able to continue to grow and doing that across so many different ways, and a focus on yourself. And I love that, the fact that you are continuing to invest in yourself and getting to understand yourself and reflecting on the past. And everybody's thinking, Billy, just ask him the question, please. So here's the question, Gino, because everybody at the Going Long family wants to understand how we can find out more about what it is that you're doing, more about your community. Please help us understand. What can we do to connect with you more?
Go to jakeandgino.com. I mean, if you want to sign up for a webinar, we have a monthly webinar at jakeandgino.com/webinar. Just start the conversation with the team. And there's so many different options. I know we were going to get on multifamily, but I knew we were going to get sidetracked as soon as we started, because it's not just about multifamily. It really is about building an enduring organization, whether you're raising money, whether you're investing passively, whatever that looks like. It really is about doing it for the long term. And I love the Going Long name. It's just for me, when I saw it, I'm like, I got to go on that show. I got to talk about long-termism. I got to talk about responsibility, and multifamily is just something that I do, but going long is something that I want to be. That's something that I want to really incorporate in my life.
All right. Fantastic. Well, Gino, listen, thank you so much. On behalf of the entire Going Long family, I want to say thank you for deciding to invest your time with me and with us. And thank you very much. Really appreciate it.
Thanks, Billy.
All right, cool. If you give me like 10 seconds, we'll wrap it up, and then we'll get you out of here. Going Long family. I mean, listen, Gino literally left so many golden platinum nuggets here today that look, just take today's conversation, share with 2 or 3 other family, friends, and then get together and talk about the concepts. I mean, he's talking about not just the investment aspect, but also really in the development aspect and focusing on your mindset, making it the right mindset. While you're taking action today, I'll be here preparing for the next conversation. So until then, go out and make it a great day. And thank you very much.